The S&P 500 keeps on reaching all-time highs, so that means that stocks are very expensive right now. Let's go ahead and take a look at some of them that I consider to be undervalued, and maybe you guys think it's a good bet to add to your portfolios. Jumping right into it, we're going to get started with Uber Technologies. As you can see right now, it shows an overvaluation of 13% based on the intrinsic value. However, if we take a look at the best case scenario, this company can be worth about $127. But the reason why I still think this company is undervalued is because recently, since September of 23, they have turned profitable and they have been increasing their EPS over time. So I think for the future, this company is definitely going to continue performing. As you can see in the financials, everything is pretty much in the green, and they made the jump from being negative to now being positive on every single metric. And if we take a quick look at the overall company efficiency, we can go ahead and see the same thing, that they went from negative to positive, and I think this streak is going to continue. Therefore, the company is going to keep increasing in price. The next one up is going to be Novo Nordisk. Of course, this one's going to be in Danish dollars, but you can do the conversion on Google. However, it's still considered to be undervalued by 30%, and in the best case is undervalued by 54%. Same thing on this one. I mean, as you can see, the EPS have been increasing year over year over year, quarter over quarter over quarter. However, the stock price is not following that. If you have been following the channel, you know I love this type of divergence. The company is making more money, but somehow the stock price is going down. Obviously, there are other things going on that are happening, the things that's going on with him and all that good stuff, but this video is just purposely to show you some companies that are considered undervalued. Again, this is not any type of financial advice. We take a look once again of the annual financials for this company. Everything is pretty much in the green. Revenue is up 25% to 290 billion. And if we take a quick look at the overall company efficiency, look at the gross margin, 84%, complete competitive advantage that they have. Return on invested capital, return on capital employed. I mean, this company is just making cash on cash on cash, and the stock keeps dropping. I consider to be this one of the best opportunities in the market. To keep the streak going with the pharmaceuticals, we're gonna have to take a look at Pfizer. As you can see, it's considered to be 22% undervalued. The best case, the stock is undervalued at 53%, meaning the stock is worth about $52. The fundamental case here is a little bit different on Pfizer. As you can see, they were making a lot more EPS and it's been dropping throughout time. However, price has been following that, so there's no divergence there. But as we can see here, the company is starting to make a little bit of a comeback and the price is definitely not following. Therefore, I am considering taking a look at this. Even though the EPS have been dropping, if we take a look at the financials, everything is pretty much on the green. So they're still generating income from losing all those EPS. That is definitely something that's keeping me keep an eye out on this stock. And again, if we take a look at the overall company efficiency, the numbers are not the best, but the gross margin 74%. Again, a very good moat, and then everything else is pretty much in the green. Now, the next one on the list is going to be Comcast, currently undervalued at a base case of 50%. The best case being this company is undervalued by 69%, meaning that the stock would be worth about $94. And again, just look at this, how price has not been following the EPS. It's just jumping everywhere. Here, the EPS were kind of steady and price kept on dropping a little bit. Then they had this huge jump in EPS and price just completely dropped. Doesn't make a lot of sense for me. If we take a look at the overall company financials, yes, revenue is up, but there's a few things that are hurting the company, like operating and free cash flow. They have been investing a lot, especially with their Peacock and their cell phone infrastructure. If you didn't know, Comcast now offers phone service. Before they were just cable and internet, now they also have cellular. And then if we just take a look at the overall company efficiency, everything is pretty much in the green. Yes, the return on capital employed and capital invested is a little bit low. The free cash flow is decent at 13%, but I mean, this is a huge company. It's not a company that's going to grow a lot, and I think it's at a decent price right now. Next one on the list is going to be UPS, currently estimated to be undervalued at about 29%, and the base case, the company is undervalued at about 56%, meaning the stock is worth about $195. This one is the one I'm the least happy about because, as you can see, the EPS has been dropping and so has the price, meaning there's no divergence. Once the EPS start going up and if the price keeps falling, I think I might invest in this a little heavy. For now, I have a few stocks. I want to get paid the dividend. I still think the stock is very low on price, even with this EPS. Again, you got to keep in mind they lost the contract with Amazon, which made a lot of their sales. So let's see how they plan to overcome this in the future. This is definitely hurting the company's financials because of all the income that they lost. However, the revenue still at 91 billion. just enough to pay their dividend. And if we take a look at the overall company efficiency, of course, UPS has been around for 100 years. They are a huge company, so they still have some cash in their research, but it's definitely burning out. I'm definitely eager to see how they're going to plan to overcome this, but this is still one of those stocks in the stock market, one of the biggest companies in America, and it's definitely a play I might be interested in once they start making more EPS. For me, another stock that I consider to be undervalued is going to be Airbnb. As you can see on the base case, it's still considered to be overvalued at about 7%. If you go to the best case, however, it's undervalued about 26%, meaning the stock could be worth around $169. Here we go. As you can see, the EPS have not really been steady. They were negative on EPS, then a little bit positive. They made a huge jump, and then it definitely dropped back down. However, I think this company will start making more sales. They are doing a lot of deals with hotels around Europe and in different countries to be able to rent out their rooms as well. So that's going to be generating more income there. Then if we take a look at the overall company financials, yes, they're struggling a little bit. The only good thing I see about this is that Airbnb doesn't need a lot of actual physical investment in terms of like houses and buildings and stuff like that, because what they do is that they outsource it. So I think that's a good thing for them to generate more free cash flow. As you can see, their free cash flow is about 16% due to this. And if we take a look at the overall company efficiency, similar to Uber Technologies, they were negative and now they're starting to turning around. So I think in the future, this company is going to be doing a lot more revenue. I ran out of the free trial version of Alpha Spread, which is where I see my stocks. So I'm going to plug my own channel, and the last stock is going to be Adobe, which I did this video is the last one on the channel. If you want to see the intrinsic value for that, and if it's considered to be undervalued, go check it out. A little bit of a shameful plug there, but it is what it is. Thank you guys so much for watching. If you enjoyed the video, please consider leaving a like. Don't forget to subscribe. And as always, I'll see you in the next video.